Let's stick with that tech trade. Despite these recent declines, our next guest says that Nvidia, Tesla, and Palantir have showed the most net buying of active stocks on his platform. Favors some low volatility, high dividend names here. Steve Sosnick's with us, Interactive Brokers chief strategist, joins us here at Post 9. It's a good day to have you.
Yeah, good to see you.
Thanks for coming in. Talk about why those names in particular are moving.
You know, we're still having this little battle between, what I'm going to call FOMO, MOMO, and NOMO. Basically, there's still this fear of missing out. We see here just the SPOs have bounced like 40 points since I've just been walked from there to here. And so people really don't want to miss what they see as a buying opportunity because for the better part of the last few years, every dip has been a buying opportunity. This one, not so much. And I think a lot of what we see are active traders sort of wedded to that strategy, hoping this will pan out. And, and those moments where it does pan out, we see, people jumping right back in.
Right. So this notion of a retail buyer strike combined with a hedge fund momentum unwind, is that a fair framing at the moment?
To some extent, I would say our customers really range the gamut from small investors to large investors, and very heavily, the numbers I'm seeing are very heavily weighted toward active traders, because if I'm looking at activity numbers, it's going to be the most active customers. Those, one of my friends at the SIBO calls it pro-tail, because they're sort of retail, but a bit more.
So what are they doing with tech, the heavily owned Mag 7 stocks?
As of the last time I checked the numbers this morning, they were still buying. Nvidia remains the most actively traded and the most actively bought stock on our platform, Tesla being number 2. These stocks brought them to the dance, and they're not abandoning them.
Was Friday a good example of that, too? What do you think happened there Friday? Or was it about month end, something else?
I think Friday was month end. I think that close was for lack of a better word, phony as can be. But it shows you how the market, as soon as there's a buyable dip with any little bit of momentum, people jump on it. And it was probably no coincidence that it was month end, certainly the month end bargain hunting, but also no coincidence that it was a Friday where you had weekly option expiration, and of course the daily option.
Despite possible regulatory risks and trade headwinds, Wall Street analysts kept their bullish outlooks, and Nvidia stock increased 1.7% on Tuesday. Earlier in the day, the stock had dropped as much as 3% as markets were pulled by the Trump administration's additional tariffs. On Tuesday, President Donald Trump levied 10% duties on Chinese goods and 25% tariffs on imports from Canada and Mexico. Although Bernstein analyst Stacey Rasgon stated in a February analysis when news of the tariffs first surfaced that the charges would hinder imports of data processing equipment, such as servers using AI processors, the new tariffs do not directly affect semiconductors. For instance, Foxconn, a contract manufacturer and Nvidia customer, is apparently constructing the largest facility in the world for assembling servers using Nvidia's Blackwell AI chips in Mexico, one of the 3 nations subject to tariffs. Chip sales may be indirectly impacted by lower demand caused by higher cost for those items. Nvidia closed Monday at its lowest level since September, down 8.7%. Investor concerns about a further tightening of U.S. trade restrictions on the chips were rekindled by the decline, which came after the Wall Street Journal reported that its most recent Blackwell AI GPUs were making their way to China in defiance of export regulations. However, following Monday's sell-off, Wall Street analysts at Citi, Bernstein, and Wedbush kept their buy ratings on Nvidia stock. According to Dan Ives of Wedbush, Trump has a tough stance on China, chip export regulations, and international affairs in general. However, he described Nvidia's downturn as a chance to purchase. He went on to say that growth investors will find this to be an uncomfortable time, but in the end, this is not the time to flee the tech industry. Rather, it is the time to own these tech AI winners. Ives kept his Nvidia price objective at 175. According to today's Bernstein's Rasgon, Nvidia's China sales represent a declining portion of total revenue, even though the company's stock has been hammered by a flurry of supply chain commotion, tariff and regulatory threats, and growth doubts. He pointed out that although Nvidia's sales in China hit a record high of almost $17 billion in FY25, they are at the lowest revenue percentage of 13% in the previous 10 years, which lessens the impact of any future tightening of export regulations. We feel that concerns about the AI trade being over are a bit premature, and Nvidia's valuation is becoming more and more appealing, he wrote, sticking to his $185 price target. In a note to investors on Tuesday following the stock's sell-off, Citi analyst Atif Malik said, "While risk-reward looks attractive on the stock with stock trading below historical troughs, we think that investors are waiting for the event that will resolve the overhang caused by the AI limits and the impact of tariffs on gross margins. Additionally, Malik maintained his $163 price objective and buy recommendation for Nvidia. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
So now for today's strategy session on this year's market volatility, mirroring what we saw at the start of last year. And according to our next guest, each sell-off then offered investors a rewarding entry point. Joining us now is Adam Johnson. He's Bullseye American Ingenuity Fund portfolio manager. Adam, it's great to have you here.
Likewise.
At the desk. So is that going to be the case this time around too, you think?
Yeah, and I think that's what we're seeing today. It's amazing to think that over the previous 10 sessions, the NASDAQ was down almost 10%, right? I mean, just day after day, and I kept looking at my screen and saying, yep, we're down again. And yet, that's exactly what we saw on 3 occasions last year. Each was a wonderful buying opportunity. In the moment, it never feels good, and I get calls from clients and they say, I mean, is this it? Is it over? No, it's not over. Nvidia, actually, as much as the NASDAQ went down last year 3 times, Nvidia went down even more, 30%. 3 times, and each time it came back. So I think you have to take the long view.
And so a lot of people have taken that long view, and long Mag 7 is the most overcrowded trade we know right now, essentially over the past 2 years. So where else are there opportunities to maybe outperform, especially knowing the pullback that we've seen in some of those overcrowded trades?
Well, I think what you're getting at is something that was impressed upon me by an early mentor. And he would ask every time someone went to interview with him, he would ask one question. And the question was, how do you make the most amount of money on Wall Street? And the answer that got you the job was find a theme and leverage it. AI is the most powerful theme in the market right now. We're all talking about it. I don't have to explain to you or to anybody why it matters, right? Just as every company became an e-commerce company 15 years ago and then a cloud company 10 years ago, now every company is becoming an AI company. So leveraging that theme is a very powerful way to make money. Nvidia became the obvious one. Stock's up tenfold because earnings are up tenfold. And then you start thinking about what AI requires. Data centers. Again, something we're all talking about. So you could actually put together an entire portfolio just around data centers.
In January, Nvidia stock hit a new high that was just around $150, but it has since dropped 16%. News that a Chinese artificial intelligence, AI, startup named DeepSeek had discovered a method to train sophisticated models for a fraction of the price and with less processing power than its American counterparts set off the decline. Investors feared that DeepSeek's approach would lead to a decline in demand for the most potent data center graphics processing units, GPUs, available for AI development, which are supplied by Nvidia. But according to a number of remarks made by Nvidia CEO Jensen Huang last week, some of the most recent AI models from DeepSeek and other companies may really cause a sharp rise in GPU demand. Here are his remarks, along with my prediction that they could cause Nvidia's stock to rise this year. Prior to discussing Huang's remarks, let's take a look at Nvidia's fiscal 2025 financial figures, which were made public last Wednesday and ended on January 26th. As the business recently began distributing its new Blackwell GB200 GPUs, which have emerged as the industry standard for AI development, investors were expecting impressive results. In fiscal 2025, Nvidia's overall sales reached a record $130.5 billion, a 114% rise over the previous year, and easily exceeding management's $128.6 billion expectation. Of that total, $115.1 billion came from the data center industry, a massive 142% increase over the previous year. During the fourth quarter of fiscal 2025, Nvidia began shipping their Blackwell GPUs in commercial volumes for the first time. It was the fastest product ramp-up in the company's history, and they exceeded management's expectations by generating $11 billion in sales. In certain setups, the Blackwell GB200 GPU can execute AI inference 30 times faster than Nvidia's previous flagship data center processor, the H100. This makes it a game changer. Inference is the process by which AI models use real-time data and prompts to generate predictions or answers. While higher inference rates enable models to handle more data to produce better answers, they can also result in faster responses in chatbot applications. Nvidia said that due to the overwhelming demand, it will need to keep increasing Blackwell manufacturing. The company's largest clients have already disclosed the staggering amounts they want to spend this year on AI chips and data centers. It's evident that DeepSeek's advancements haven't stifled the need for greater processing power, even though not all of that money will go to Nvidia particularly. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Nvidia is really important to the market, and Christina Partsinevelos is really important to us, and so we welcome her in now. And I hope my microphone was muted.
Our audience is really important to me, which is why I'm actually going to start with Super Micro, something different for a change.
Well, it was, by the way, worst stock in the S&P 500.
You're taking it right from, because volatility is the name of the game, especially within chips and hardware. Super Micro, to your point, swung from the S&P 500's worst performer to its top performer overnight, pushing ahead with a new Silicon Valley facility. So they mentioned this a few days ago, and they're going to be building despite tariff challenges, lawsuit, DOJ, SEC probe, so a lot of volatility in that name. Taiwan Semi planning a massive $100 billion investment, but also could face even higher operating costs. They complained about this in the past, so that could squeeze margins, yet shares are up about 5% right now. Nvidia, to your point, its stock is on a wild ride, trading at a market multiple that almost matches the S&P 500, so when normally it should be trading at a premium because it's a growth company still. And that raises the question, is Nvidia undervalued? Some are saying yes, or is the market headed for a fall, for that market multiple to be lower? There's still a lot of regulatory risk for Nvidia. AI diffusion rules restricting chip exports to certain countries that would come into play this May. The possibility of further China bans, specifically the H20s. We talked about that yesterday, but just it is a big portion of their business to China. And then switching to Intel, you can see shares, one of the few chip names down almost 5%, 5.5% after recent chip testing buzz with Ohio plant delays suggesting potential demand issues. So there was a note yesterday that NVIDIA and Broadcom were testing Intel's advanced processes, and now you're seeing that saw up. But the most interesting trend on with that is investors are shifting, really. We're seeing this AI shift, which we see across the market, but traditional analog names like Texas Instrument, Analog Devices, those are holding steady if you look on a year-to-date basis, which is interesting for the chip sector.
Okay.
What do you want to go to?
Okay. I want to use your big knowledge brain about stock, because you're also at the NASDAQ all the time.
Correct.
Right? So you know the stock market and you know Nvidia, and see how nice I am?
So nice.
So nice.
So nice. Let's praise you.
And that's a song, Fatboy Slim, right?
Praise you like
I didn't ask for you to sing. I just want to mention the song. How important is Nvidia to the market? We said 546, I think it was the actual number, ETFs. Nvidia, in some ways, almost is the stock market.
Well, because it's weighted, right? So I think as of last year, the S&P 500, it was over 5%, or it accounted for 5.5% of S&P 500 return. So to your point, it is a big portion of the market. So when it does well, it goes with it. The AI trades also move in almost tandem with NVIDIA as of late. So yes, it has an outsized weight on the markets.
One of the leading AI startups in America is OpenAI. It has invested more than $20 billion since its founding in 2015 to train its AI models, assemble its skilled workforce, and construct data center infrastructure. As a result, it was shocking to learn that DeepSeek only spent $5.6 million training its V3 model, which on some metrics performs similarly to OpenAI's GPT-4o models. Although SemiAnalysis estimates that this does not include $500 million in infrastructure spending, it sent shivers down Wall Street. Since NVIDIA's most recent chips are prohibited from being transferred to China, DeepSeek is unable to use them. To compensate for this, it employed a number of ingenious software strategies. One of them, known as distillation, uses the most successful models, such as GPT-4o, to train lesser models, accelerating their development significantly. Because it reduces traditional training workloads, which might entail gathering, honing, and processing masses of data, this uses a lot less resources. Chip demand for training workloads would likely fall if distillation became the only method used by AI developers. However, startups like OpenAI are now concentrating on creating reasoning models, which spend more time thinking to get the best responses, after discovering that pouring unlimited amounts of data into their AI models was no longer yielding the intended results. This indicates that they are generally depending less on conventional training techniques and allocating their computational resources to inference tasks. This leads me to Huang's most recent remarks. He said that reasoning models can use a staggering 100 times more computation than their predecessors during his conference call with investors last Wednesday. He thinks that some models may eventually require dozens or even millions of times more computing power to provide extremely intricate simulations and other results. Today's reasoning models include DeepSeek R1, Grok 3 from xAI, Claude 3.7 Sonnet from Anthropic, and GPT-4o1 to GPT-4o3 from OpenAI. The majority of the leading developers are obviously shifting away from pre-training techniques and toward this approach, which suggests that Nvidia may be about to enter a new demand phase for its chips. Nvidia stock is trading at a price-to-earnings PE ratio of 42.5, which is 28% below its 10-year average of 59.3, based on the company's fiscal 2025 earnings per share, EPS, of $2.99. Furthermore, according to Yahoo's Wall Street consensus estimate, the company may produce $4.49 in EPS in the current fiscal year 2026, which would put the stock at a forward PE ratio of only 27.7. To put it another way, Nvidia stock would need to rise by 114% to trade in line with its 10-year average PE ratio, or by 53% over the course of the next 12 months simply to retain its present PE ratio. Given that the DeepSeek saga was a major factor in the stock's recent decline, Huang's recent remarks regarding a possible 100-fold increase in compute requirements for inference workloads may serve as the impetus for investors to return to the company, particularly if its financial results this year confirm that forecast. Nvidia's stock may therefore rise during the course of the upcoming year and most likely beyond. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.